Good day, Shrewd Traders. This is Gary Ender looking at the S&P. This is really part 2 of the video that I created yesterday. My goal with this video is to talk to you about where the potential targets could be if the S&P does turn over. I detailed the reasons why I thought it would be turning over, and now let's talk about the potential targets. First, if the S&P does turn, it's not going to take very much movement for the STM to go into a bearish mode. When the STM goes into a bearish mode, I would expect decent follow through on the downside. This is a bearish wedge that we're looking at. The first target on a bearish wedge, the way that we typically measure that, is the beginning of the wedge, or this point down here. Let's call it 1266 on the cash chart. We obviously have support points before then around the 1330 area, around the 1310 area. But if this does break down with reasonable momentum in this market, I'll be looking first down at the 1266 area. A move below the 1266 area will take this market much lower. If I switch to a weekly chart, we see that we have a high up in here, the 1412 to 1425 area. We see the market currently moving up towards that direction. I should also say that tomorrow we have the Fed meeting. The day after that we have the ECB meeting. And it's not going to really surprise me if their words, no matter what they're saying, puts a little spike in the market. Maybe up to 1400, maybe up a little bit higher. It's been the normal reaction lately when there's a Fed meeting or something coming out of the ECB that traders have been buying first, analyzing what they've said, what they've done, what the impact of that is a little bit later. So even if the market's going to turn down because they really aren't doing what traders would have wanted them to do, it's not going to surprise me at all if we do spike a little bit higher. But when we do break this 10-period moving average on the weekly chart, or we break out of the bottom of this trend line and we head down towards the 1266 area that we see this trend line right here that I just highlighted, we're going to look at this basically as a double top, where we have a top here. We have a top somewhere between where we are right now and where we could end up by the end of this week. The way we measure that is to take the midpoint up to the top and add that to the breakdown level. So that's basically what I did with these white lines. That puts the breakdown level on a rough measurement down at 1117. You don't really need to measure something like this very exact because it's just a guideline of what you'd be looking for. So if we take this measurement, extend it down, where does it take us? Right to these lows over here. Very logical spot. We also have a swing low right in here, so let's put a trend line on there as well. There we go. So we really have a zone down here, and we could actually put another trend line all the way down on this swing low and say that any of these three could be potential points where the market would want to go to. And interestingly, the measurement takes us right to the middle line. You might have heard me say that my target on the S&P is 1150 because that's the most conservative target. I'm truly looking for something around 1120, and if we can get below that, we'll be looking at the 1075 level. If the market did decide that it wanted to go below that, then we have the swing low here, the swing low here, which is like 1015 down to 1040. I would suggest that the market would have a pretty good bounce off of one of these levels in here before it thought about going down into this area. But you never know. If we get a lot of momentum in the market on the downside, we'd have to have quite a bit of fear in the market if it's going to head down to this level. I should also say if we get above the 1425 level on a closing basis, and that's confirmed, that I expect prices to move higher. But I think the more likely scenario is that the market fails to make a new high here, rolls over some price between here and that 1425 level, and these price targets come into play. Again, we'd be evaluating what the price action is at these different levels to determine if there's going to be a bounce taking place. I thought it would be good to give you some insight into the methodology that I used to create these targets. This is Gary Ender from ShrewdTrading.com. Stay on the right side of the trade.